Welcome to Crypto Quandary, home of blockchain and cryptocurrency news and updates. If you like today's episode, hit the tip button and subscribe for more. Crypto Quandary, as you can see, we're still hanging out in the Citadel. Shout out to Lucio Paletti because that is his part. Hope everybody's doing well on this lovely Tuesday afternoon. If you're new to the channel and you're new to Bitcoin and cryptocurrency, I actually have a book out. It's $3.50 on Amazon. I've been told it is broken down to the point where it is actually very easily understood. So if you want to check that out, it's on Amazon.com. Check out Grasping Bitcoin with Ease. And here I'll play a little video that shows you, it's like a 10-second video, and it'll give you a little bit more information on that. Amazon.com, because grasping Bitcoin has never been easier. If you're interested in that book and learning more about cryptocurrency, go right over to Amazon.com. If you want to pay in crypto, email me at cryptoquandary@gmail.com. That being said, let's move into the news. So this past week has been wild with cryptocurrency news. I mean, all over it. It's DeFi, decentralized finance, and the coins are going crazy. They're, the prices are going wild, up, down, all around. We had Comp come out, which was at $60 one day, and then ended up rising to, I believe it was over $300 within days. But then we also have Bitcoin, different things on Bitcoin, different price predictions. Again, I'm not going to get into like crazy price predictions. I'm not going to sit here and tell you what Bitcoin is going to, could be worth, this and that, whatever. I mean, we get it. It's, it's store value, but we had CryptoDotCom, so there's been a lot of news, to say the least. But that being said, let's get into it. So first order, I'm going to talk about Kyber. If you haven't heard about Kyber, the Kyber network, KNC, Kyber is a decentralized, it's a DeFi coin. So, and again, I'm not shilling it or anything like that. It's just news that's out. They announced their Catalyst upgrade for July 7th. So keep an eye. All I'm going to say is keep an eye on this coin, this project. It says, we're thrilled to, and this is a Twitter post, we're thrilled to announce that the Catalyst and KyberDAO will go live on the 7th of July, 7 a.m. GMT. This will usher in an exciting new era for Kyber with technical improvements that will help enhance liquidity for DeFi. So they are having a big launch on the 7th here. Well, announcement. So it goes on to say, the upgrade will lay the foundation for a range of new technical improvements aimed at decentralizing liquidity and open finance, as well as introducing the KyberDAO, protocol's platform for community governance. Once launched, all 72,000 plus KNC holders, Kyber token holders, coin holders, will be able to stake their tokens to participate in governance by voting on new proposals and other protocol parameters. The best part about the Catalyst upgrade is that KNC holders are awarded for governance participation in Ethereum. So what this is saying is that they will be awarded with Ethereum, in Ethereum, with Ethereum. You get the point. Moreover, there is no minimum or maximum KNC that needs to be staked in order to participate. That's huge. Ultimately, allowing anyone in DeFi to participate and earn from governance. The protocol's trading fee will be allocated to three main buckets governed by KNC holders. These include staking, governance rewards, rebates for Fed price reserves, and KNC burns. Here are the current allocations under the network fee parameters. 65% for governance rewards, 30% directed towards reserve rebates, 5% used for purchasing KNC tokens and burning them. So the Kyber network they're doing big things. So definitely keep an eye on them. As we say in the crypto space, DYOR, do your own research. Go ahead and, give it a Google, check it out, read about it. I mean, at the least, you'll just educate yourself a little bit more, Network fees from trading activities, it goes on. Value creation for KNC holders. Participation rewards, stake and participate in KyberDAO to get rewards from the network. Burning, long-term value accrual from decreasing supply. And reserve incentives, rebates based on performance to drive greater volume and fees. It's important to note that these are only the initial parameters and are subject to change based on future KyberDAO governance. With the DAO going live on July 7th, this will mark the beginning of Epoch 0. During this time, KNC holders will be able to stake, while the first round of voting will launch a week later in Epoch 1. The Genesis Epoch 0 will only last for 1 week, while Epoch 1 and all others moving forward will last for 2 weeks or 14 days. The first proposal to go live will confirm the fee parameters with an on-chain vote. It will be a simple yes or no on the initial protocol parameters, 65% rewards, 30 rebates, and 5% burn. All users, regardless of their vote, will receive staking rewards as long as they participated in the vote. To lower the barrier to entry, barrier to entry, KNC holders can also delegate their voting power to the Kyber community pool at no cost, giving them a unique mechanism to capture staking rewards in a passive manner. Upgrades for the builders, upgrades for Kyber liquidity providers, and closing thoughts. So the upgrades for the builders says, beyond the introduction of KyberDAO, the Catalyst upgrade will also allow dApps to set their own custom spread and fee on each trade. This mechanism will effectively allow developers to build out their own revenue model by integrating Kyber Network as their in-app liquidity source. Given how sustainable revenue models are increasingly harder to come by in DeFi, we believe this provides a compelling dynamic for developers to integrate Kyber over the DeFi liquidity protocols. Better yet, decentralized app developers, dApp developers, can also expect a reduced network fee from 0.25% down to 0.20%, with Uniswap offering trades at 0.30%. This provides Kyber with another edge over some of the other leading competitors. Upgrades. Kyber liquidity providers will also see a simplified fee system. Reserves will no longer be required to hold KNC in order to receive a slice of the network fees. Instead, 30% of the network fees to go towards incentivizing Fed price reserves, the on-chain professional market makers who provide about 70 to 80% of all liquidity on Kyber based on the amount of volume they facilitate. Closing thoughts are, with protocol governance playing an increasingly more important role in DeFi, there's no doubt that the Catalyst upgrade is set to build on the narrative. After Compound launched its decentralized community governance on mainnet, there was a wave of new interest in prospective protocol politicians. We were expecting the same thing to happen with Kyber, especially with Ethereum incentives. Yes, a lot of people love Ethereum. And I didn't mean that in a bad way at all. So the top DeFi earners, protocol, then it has earnings and the dominance. They have Kyber Network here with $3,247,215 at 20.69% dominance. So as you can see, Kyber is dominating right now. Yeah, then they have DYDX, which is 2.5 mil at 16%, 16.32% dominance. Compound, 2.3 million in earnings with 15.06% dominance. Bancor with 2.2 mil, 14.37% dominance. and Uniswap with 1.7 mil and 11.25% dominance. With over 3.2 million in projected earnings this year, we're almost positive that we'll see a flood of new users coming into the system. DeFi it's like I said, it's huge, and it's just blowing up right now because people are realizing that they can stake coins, they can do different things with it. There's lending platforms, there's wrapped BTC, which is something totally, like, that's a whole nother thing to, you know, wrap around. But it's a whole nother video. At current earnings, the protocol is expected to allocate the following based on the current parameters: 2.11 million towards governance incentives, 975,000 is directed towards FPR, 162,000 in annualized KNC burns. That's just at the growth rates too. With Catalyst upgrade enabling a potential revenue model for dApp developers, you can expect to see more integrations across the board, and in turn more volume and more earnings. As a result, the Catalyst upgrade could very well bootstrap a positive feedback loop for the future growth, propelling Kyber into becoming a foundational piece to the overarching DeFi vision. So they're really looking to, you know, take DeFi to the next level here. Till then, if you're interested in learning more about Kyber and the Catalyst, be sure to read up their official announcement post here, which is on Medium. So you can go on Medium and just search Kyber Network, or you can just go on Twitter and at Kyber Network, you'll find it. For those interested in jumping on discussions, you can hop on the Discord or follow them on Twitter, like I said. So pretty interesting. Like I said, DeFi is going to be pretty big. It's already pretty big. CryptoDotCom is another one with the DeFi, and we'll get into that in a little bit. So moving on, Bitcoin price, 75K within weeks. Recovery mimics 2013, 700% bull run. So, yes, a lot of people are saying that, you know, we're going to see a huge rise in Bitcoin. Do I agree? I mean, I'll throw my opinion. It's only my opinion. It's not investing advice. I think Bitcoin is due for a big surge. Whether it's going to go down first, I don't know the future. So, you know, and again, could be wrong, but I just feel that Bitcoin it's going to be big. I think we all know that. Bitcoin, let's see, BTC USD, so Bitcoin versus the US dollar, perfectly repeating its run up to the all-time highs in 2013. Price analysis reveals, despite mixed feelings about 2020's outlook. So with money printer going and all that and everything else, Bitcoin's hanging in there. Bitcoin is looking like it will hit 75,000, and that could happen within weeks. And by the way, this comes to you from Cointelegraph.com. Uploading a fresh Bitcoin price chart to Twitter versus the dollar. On June 7th, Cane Island alternative advisors Timothy Peterson unearthed an uncanny similarity to Bitcoin 2013. So what he's saying is that the chart it had a big similarity to what went on in 2013. He's seeing that kind of start to play out, or possibly will play out now. He said, tracking Bitcoin's price recovery from its lows of 3,600 in March, Peterson noted that its recovery almost exactly tracked price action from 7 years ago. Again, similarities, correlations. The result he argued could keep up the copycat move. BTC topped out at $1,300. That's $1,300 in 2013. So we're going way back. Well, we're going way back. And a similar 700% bull run at today's price would give a target of 75,000. So that's what they're saying. They're saying that there's similarities, and if we see that 700% bull run today, we're looking at 75 grand for one Bitcoin. So, yeah. 2020 Bitcoin recovery has tracked the 2013 recovery almost perfectly, he summarized. So we'll see what happens. Again, I'd love it. I mean, I think we'd all love it, you know, to see some nice rises like that, some nice jumps. But again, we want to sustain it. We don't want to see, you know, 75 grand drop to, you know, 7 grand. Let's be real. We want it to be sustained. And again, whenever you have a substantial rise like that, it has to correct itself, because once it goes up to, it's never been up to 75K. So if it hits 75K, it has nowhere to like come down to. It's like, you know, there's no support anywhere. I mean, it's just once it hits that resistance and breaks that resistance of 20K or 19, whatever it was at the time, at its high, once it breaks that, it's like it could go and go and go and go. And then eventually when it decides, you know, when people stop buying and everything and people are starting to sell it and like, oh, let me sell, it's just going to tank. There's no support. So, I mean, there's no support until you get down to, you know, like where we're at now, like, you know, probably 10K. But I mean, again, we'll see what happens. I don't have a chart pulled up right now. So Crypto Research Report predicts 397,000 Bitcoin price by 2030. So here's more bullish news. Nothing wrong with that. Researchers behind the June report from the Crypto Research Report used Bitcoin's target addressable market to predict a rise to $397,000. So by 2030, again, here's another article saying that it could possibly hit 397K in 2030. You know, they're looking at the current price of Bitcoin being 92.63 at the time of this article writing. 2020, they're looking at the end of 2020, they're looking at $19,044. By 2025, they're saying 341K. 2030, they're saying 397K, and then back to 395K in 2033. So, I mean, that's super bullish news. There's nothing wrong with that. But, I mean, what happened to 100K and 200K? I guess that's between 2020 and 2025. Hey, I'm not saying anything negative about this thing. I mean, that's fine. Let's just hope, you know, that'd be awesome if this was on point. So Ethereum, it says from current 2020, 2025, 2030, and then 2033, we're looking at 208, 331, 3549, 3644, and then 3441. Litecoin is going from the current of $44 to $2,299 in 2033. Bitcoin Cash $235 to $12,941 in 2033, and Stellar 7 cents to $8.26 in 2033. So I mean, we'll see how all this plays out. Who knows even what's going to be around by then? The way technology goes and continues to change and improve, and you know, we'll see what happens. You never know what could happen. So that's a little hopium. A little bit of hopium for today. And the European crypto card. So CryptoDotCom. I will be doing a video on that as well, as far as, because a lot of people have questions on that I've spoken to. They have questions on how you use it. You know, are you like loading the card with Bitcoin and it's spending Bitcoin and cryptocurrencies at like retailers? And so what happens is you buy the crypto and then you transfer it to the card via the app, and then what happens there is it swaps it to USD once you're topping up the card. It swaps it to USD, and you're good to go. You're good to go to swipe your card. And then when you swipe your card, you get rewards back in MCO tokens, which is their CryptoDotCom, one of two of CryptoDotCom's coins that they have. They have the MCO token, and then they have the CRO token, the CRO, the CryptoDotCom token. So the MCO is a rewards based. So you're staking them. And again, I'll do a video on this next. So the next video that comes out will be on CryptoDotCom. Until then, if you have questions, find me on Twitter at CryptoQuandary or CryptoQuandary@gmail.com. Just shoot me an email and I'll help you out. I'll answer questions and stuff like that. But so the problem was Wirecard had an issue where their audit did not go so well, and I'm sure everybody's kind of heard a little bit about this. And if you haven't, well, here it is. And they are usable again. So it says CryptoCom and 10x crypto debit cards are usable again as UK regulators allow Wirecard to resume regulated activity. So, and this goes into, and Ivan on Tech talks about this a lot too, about how these, auditing, it's, and I'm not saying anything about Wirecard at all whatsoever, but auditing in general is, it's something that can be taken away because we all, whenever you get an auditor for your business or whatever, like you have to pay them. So, it's like you're paying somebody to give you a bad audit. I mean, like, it should be black and white. It should be, if it's, if there's something wrong, then there's something wrong. Like, yeah, it's wrong. Okay. Like, here, you paid me, I audited you. Here's your results. But, a lot of time things are shady, and I'm not saying that is what happened in this scenario. I'm not speaking about that. I'm speaking about auditing in general. If it was all done on a blockchain, you wouldn't need an auditor. Everything would just be boom, boom, boom. All you would have to do is you wouldn't even have to trust an auditor. Consumers wouldn't have to trust that entity that's getting audited. It would just be verify. Done. Don't trust, verify. So Wirecard issued crypto debit cards from companies like CryptoCom and 10x have reactivated following permission from the UK's Financial Conduct Authority, or FCA. So they were shut down in the UK and they just came back online. On June 29th, the UK watchdog allowed Wirecard Solutions, a Newcastle-based subsidiary of troubled German company Wirecard AG, to resume regulated activity. The FCA suspended Wirecard Solutions license on June 26, soon after news about Wirecard AG misrepresenting over $2 billion in cash reserves surfaced. Restrictions were lifted at 01 midnight on June 30th. Meaning that all crypto debit cards issued by Wirecard have now been re-enabled. The regulator stressed that there are still requirements imposed on Wirecard's authorization. News has since been confirmed by CryptoCom and 10x, who announced that their crypto debit cards are now usable again. And again, this has nothing to do with, to be completely honest, I'm not familiar with 10x, so I can't speak for them, but I'm assuming that, it has nothing to do with them either. I was going to say it has nothing to do with CryptoCom. That's the card provider. This is the card provider. This isn't CryptoCom. I mean, could it affect CryptoCom? I'm sure it could because that's the card that they use. But CryptoCom is they're pretty big. I'm pretty sure that they have all their eggs in line and they're ready to do what they have to do to keep their business rolling. Wirecard is in big trouble. The scandal started on June 18th when auditors from Big Four accounting company EY could not confirm the existence of $2.1 billion in cash. $2.1 billion. As previously reported by the Financial Times, Wirecard staff in Dubai and Dublin had allegedly misled EY for nearly 10 years by conspiring to fraudulently inflate sales and profits at Wirecard subsidiaries. June 25th, the troubled company filed to open insolvency proceedings, which could be seen as a first step to bankruptcy. Shareholders in Wirecard have already filed legal proceedings against EY for its alleged negligence in auditing the firm. Marcus Braun, former CEO of Wirecard, was arrested by police in Munich after being charged with misrepresenting the company's balances. So there you have it. The cards are working again, but this is a developing story, so I'm sure we'll see more on this. And if you do have CryptoDotCom and you do not have Twitter, I would recommend just jumping on Twitter and checking out their updates, because they have been very good. They've been great with keeping their customers and everybody, their users of the platform, updated on this whole situation. They've been really great about that. Very transparent, just putting up information right through Twitter, boom, 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 no problem. But with that being said, there's been, like I said, a lot of positive news in crypto, and then we've had this. But again, this is the card company. This was something totally different, and anything could happen. So you always have to be careful. But I do know that CryptoDotCom did, when they shut down the cards at first, they did transfer. I believe they transferred those funds right back to the fiat wallets, or the wallet. So they recovered the funds. So people did not have any issue with it. So like I said, they've been on point. So next video will be on CryptoDotCom. I'll explain it. If you have questions before that, feel free to hit me up on Twitter at CryptoQuandary, and it should be in the bottom somewhere on this video, the tag, the handle. So, or CryptoQuandary@gmail.com. And I'll be more than happy to answer questions, help you out, whatever you need. If I don't know the answer, I will find it out. But today is Tuesday, so enjoy the rest of the week. The video will be out most likely midweek, Wednesday, Thursday, so look out for it. And everybody, enjoy life. Go outside, get some fresh air, take a deep breath outside, and breathe in that oxygen. Stay positive, and let's go Bitcoin.